right? So the first one, as you can imagine, with that sort of mindset of invest in what you understand, Meta, right? So obviously I teach Facebook ads. I understand the platform. I understand, and I'm always up to date with what's working, what's not working, etc. And so when their stock went down by like 75%, I was like, that is an absolute joke. If I had to bet on anybody making more money, it would be Mark Zuckerberg. So I went in quite heavily on Meta. It's now, I think, maybe like 2.5 times up. So a big return on it thus far. And I would imagine with them not being at all-time highs that there's still definitely room for growth. But I'm interested to know from your fundamental analysis, is this a sell or is this a hold or is this a add to the pot?
Great point. So I'm just getting it on my screen actually, just so I can see the fundamentals for you. But on the face of it, by the way, I was actually invested in Meta as well. So, make of that what you will. I think I had a very similar outlook to you in that I regard them as a company that's not going anywhere anytime soon. And while their earnings may not be amazing this year, opposed to last year, I think the overall outlook there actually looks very strong. I think don't say their downfall could be, or their limitations probably, and you know this way more than I do, like the industry, you're more into it, but bad news travels fast in the social media thing. So, with the Cambridge Analytica thing and all that stuff that happened, that was a bit of a catalyst for the drop, right?
Yeah.
So it is very open to that kind of stuff. Now, as I said earlier, I don't actually pay too much attention to that because if the numbers are solid, my thinking is if a company's great and then a news article comes out that day, the next day it's not suddenly a bad company. Yeah, they're still doing the same thing. They're still as profitable, all of that kind of stuff. So I'm actually cool with it. So yeah, I think it's a solid one. My only thing would be, when's the time you get out of it?
Yeah. That's my question at this stage because if I was to look at it as a company and its valuation and everything, and what I believe about it and where I believe it's going to go, I would say that it's still to be added to. I wouldn't be I'm not expecting anything that I would add to the pot right now to double or triple like it previously did. I think I got an absolute steal of a price point. But I definitely think there's room for growth. But this is nothing more than me looking at it compared to all-time highs and saying what was special about the company then versus what's special about the company now. I mean, and when we were talking 20 minutes ago, maybe, well, no, it wouldn't have been 20, maybe 10 minutes ago, about news stories, Cambridge Analytica helped the stock come all the way down. Simultaneously, the moment that they said they were sacking like 40,000 people and their wage bill was going to go down super, super significantly, that was like stock went through the roof. It was like 18% up in a day. It was bonkers. But I'm also, I don't know if this is the same for you. Probably not with the style of how long you hold things for. But you see, when I'm about 11 months into a stock, I'm like, if I hold it for an extra month, it's long-term capital gains. I pay less in tax. So I'm like, my outlook becomes, do I think it'll still be in the same position or better in a month's time so I can get the lower tax rate on it? I don't know if that comes into anything that you do.
Well, it doesn't, but only because I'm not in them that long.
Yeah.
So it doesn't actually come into play. However, what I think the difference between how I approach things and what it sounds like you approach, for me, before I get in, I know when I'm getting out.
Yeah.
I don't mean in terms of like when it hits this price, I'm going to sell. I don't do it like that, but I do have a very step-by-step system of like when it gets to a certain point, I put a stop loss in to lock in that profit and secure it. And if it goes higher, great, I can bump that up. But if not, I'm out and I'm cool with that. I need that in my strategy because, as I said before, when I first started, emotions all over the place. Like, I think this is going to keep going up. I won't put, and you fall foul to it. So for me, I've got that in there that these are the steps to follow when you're in profit, and then the strategy decides your fate. It's not you, and that's quite a nice, freeing thing to have there. If that makes sense. But if yours is like more longer term, then kind of a different outcome there.
Yeah. Well, the stop loss is definitely a strategy that I haven't brought in, and definitely from this talk, even just you mentioning it there, it's definitely something that, especially if I've already held something for 12 months and it's already done really well, it'd probably be a great thing to put in place. So yeah, I'll probably definitely look at that afterwards as well. Second trade was Amazon, right? So Amazon, again, massive crash. They're a company with not a lot of profitability anyway. They have extremely high revenues, of course. AWS is the thing that is responsible for so much of their profitability. But when the crash happened and it was just all tech crashed, they were one of the ones that sort of came down with it. And again, it was that old thing of, do you believe in the business for me? And I was like, I would bet my life that Amazon will find a way to further profitability, to making more revenue, and all of those good things. Even like that thing of, it's either going to grow or the big man's going to come back and it's going to be it's going to be a news article, and you'll get your double there. So I think I'm something like 70 to 80% up on that trade, I believe, at this stage. It's definitely not at double yet, because I think it's trading at like 142 or something. I think I got in at 85, something like that. I don't know, something like that. But what's your thoughts on Amazon as a trade now?
Right. So for my strategy, I wouldn't be going for Amazon. For some of the reasons you mentioned, to be fair, like it's not like as liquid as I like not easy for them to generate cash as quickly, slightly high debt, that kind of thing. However, having said that, the reasons you gave make a lot of sense too. Right. So I think it seems, actually, I agree with you. I can't imagine Amazon going anywhere. Right. There's no way that they're going to fail. They're one of the most powerful companies, I would say, there is. So with that in mind, I liken it to Google. Like, if there's World War III tomorrow, they're probably going to be all right. That's kind of how I assess these companies. So in that sense, I think it's a great longer term one, especially if it drops. It's kind of on sale, right? Which is what you picked it up at. You picked it up on sale. Great, you're going to get that. And 70% of the year is phenomenal. So I think you've done very well there. But yeah, for me, it just doesn't fit exactly what I look for. But I'm also cool with that. Even if I know it's a good investment, but it doesn't fit my strategy, I won't go for it. Just for my ease of like trying to keep my discipline and things like this. And maybe I miss out on some great opportunities like this. But again, I'm trying to do this in less than 5 minutes a day. So I've got systemized, right?
This took way too much time for me to make these decisions. And it takes up way too much time for me to be checking this like 3 times a day to see what's happening. Okay, right. I'll tell you my third good one, and then I'll tell you the embarrassing one that I still unfortunately hold right now, and maybe you can give me some advice around that. So the third good one was Tesla. And I was that old person that said, like, everybody was just buying into Tesla that has this like ridiculous multiple on it and blah 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 blah. And I was like, it's totally overpriced. I would never get into it. But then there was the massive crash, and I was like, well, if there's one company that I believe in going forward that is going to continue to grow, that is going to have the right quarterly numbers to continue to create that euphoria, and then also if I believe, and I do believe in that robotaxi will be a thing, and whether that is, well, he said by the end of this year he reckons it will happen. It won't, but if it was to happen next year at all, like, that whole idea of Tesla is a car company as it stands at the moment, but if they go into robotaxi, they become like they'll have the margins of like an online business, like a tech company.
Mm-hmm.
So from my point of view, I was kind of like, right, it's massively on sale. A lot of what trades and what happens around trade prices with companies that are successful and continuing to grow is going around all-time highs, right? So it was so far off of its all-time high that I was like, this feels like quite a safe bet, continuing that it's going to be profitable going forward. And then longer term view, I also believe in it becoming robotaxi, and that creating a whole different marketplace and then being the only people in the marketplace in that moment. So that was my in for that one. That one's got a better return, I believe, than Amazon. So I think that's number 2. Meta is number 1 for me. So what's your thoughts on that? Because I know this is like if nobody's ever traded before, they go in and buy Tesla because somebody said on YouTube to buy Tesla. Please don't do it based upon this episode. Like, this episode is not like your stock picks, right? I just want Ben to like tear these apart, tell me why I'm wrong, and help me get out of the fourth one that I'm about to tell him about.
Of all the 3 stocks we've spoken about, Tesla is my favourite, and one of the big reasons for that is like the fundamentals are very, very strong. And it's really strange because it outperforms any other car company that you look at on there. Like, it's not even remotely close to anything. I think I'm right in saying, don't quote me on this, but it's worth more than all the other car companies combined. Something ridiculous like that. Like,
yeah.
In terms of market cap, which is nuts because it's worth like 800 billion at the moment, which is obviously huge. And the reason is, it's not a car company as such, it's a tech company. Or at least that's how it's viewed by investors. So if you look at it on paper, all the data, it matches a lot of tech companies very closely and doesn't look anything like a car company, which is a really strong thing, I think. And I agree that I think if one company is going to innovate, is going to get themselves out of any trouble that there might be further down the line, there's not a much more forward-thinking company than Tesla. So yeah, I really like them. And the other thing is when they move, like the stock. A good example is like if you invest in a company, I'm going to say Kellogg's. Everyone's heard of Kellogg's, yeah, cereal company. When they move up, they move at like 5%, 10%, 13%, that kind of movement. Well, if you're investing in a company like that, you can't really expect to make much more because it just doesn't move a lot. Whereas Tesla, they move like 30, 40, 50, way beyond that percent every time they do a big movement. So just simply speaking, you've got a much better chance of making a decent sized profit. Now, equally, they do move down a lot more as well.
Yeah, I was about to say they're quite good at moving down as well.
But if you believe in them like we do, I think it's a very interesting investment to look at. Obviously, not. Yeah. I wouldn't say just go and throw money into them, do the research. Yeah. But, I really like them.
Excellent, superb. Right, now I'll tell you my fourth one, and this is the one that hasn't performed so well. This is Peloton, right? Yeah, exactly. Yeah, thought that might be the case. So here's my reasoning behind why I went into Peloton. I looked at Peloton like buying a company rather than buying Bitcoin, because I was like, for a small percentage, so it is a small percentage of my overall investments, but still, it was a few shekels, and I still threw it in there on Peloton. And I also have Peloton tread, like I've got the Peloton treadmill, like we've got it in our house, we use it, I like it. I originally said, before they even said and came out, that they were going to start focusing upon subscription model rather than actually selling the machines. It was about the classes and the diversity of the classes. I said to my wife, like, the genius thing here is if they start selling all their classes, because people can do this like in their home. They don't need the equipment. So I believed in it, and I thought it's a stock that was at 160 a share, and it was down at $9 a share, right? And so I was like, it's got to move. It's got to have some movement north, right? And funnily enough, I bought the stock, and it went up to like 10, then it went to like 10.5, then it went to just short of 11. And that's a decent, it doesn't sound like a lot, but because it's like 9 to 10.5, that's a decent chunk. It's like 15%, right? Or 10, 12% or something like that. So decent chunk on the move up. And then it just started to come down. And then there was all of these class action lawsuits and all sorts that happened. And now it went all the way down to like $5 a share. So it's basically came down like 48%, something like that.
I just had a quick look. It's at about 460 at the moment. It's sitting at.
Yeah, it's not a great position.
It doesn't look great, I'll be honest.
Yeah.
What was your outcome when you first got into it? What were you thinking? Were you like, if it gets to X, I'm going to get out, or I want to hold this for a year, see what happens, or was there a?
Well, because it wasn't a big percentage of what I was putting in there anyway, it was a bit like the equivalent of putting a small percentage of your investments into things like crypto and Bitcoin. It was more of like if I lose it completely and it goes to zero, it's not going to be a huge like issue.
Mhm.
But if it doubles, triples, quadruples, then it'll be a meaningful like bump to the overall profits of the account. So that was my outlook on it, because I was thinking more along the lines of it's not going to get to like COVID numbers. Like that's why it had $160 dollar stock price,
Mm.
because they were selling like crazy because everybody wanted to continue exercising,
Mm.
but from the comfort of their own home. So that's unlikely to happen.
Yeah.
So they are not going to get back there. It's highly unlikely unless something else happens. Um, but my perception was that it could certainly get back to 20, 30, 40 by simply being a good business again. And the people who had previously bought Pelotons, and it was like a saturated market, they're aging up, which means that people below them are aging up, and they become part of like the target demographic. So I thought the subscription model was good. And then the third thing that I was kind of like, oh, well, here's a side thing that could go well, is I feel like at their valuation now compared to where they were, they're an acquisition target. Like they could get bought by like Amazon or another company that does sports equipment, right? So like they could be acquired, and then that usually comes with a bump as well. I mean, that bump would maybe take me back to my stock price, my buy price at best. So it's definitely not the way that I would look at it right now. But those were my three things I was thinking when I got in.
Okay. Well, looking at it now, I mean, the outlook isn't ideal. We'll say. I personally, if I were in your situation, I would be looking at, all right, it wasn't a huge amount of my capital I put in the first place. I don't want to lose this, but if things go bad, it's not going to ruin me. I would probably just be patient and wait for it to get back to break even. And if it's to tip above break even, get a stop loss in, and then the worst case scenario then is you break even, you get your money back. That
Yeah,
would be kind of
yeah,
my outlook. I wouldn't be thinking, oh, I'm going to make 20, 30, 40% on this. I might just be like, look, I'm going to chalk this one off to experience, and if I can get out my money back, amazing. That's kind of
yeah.
what I would look at. But again, I don't know much about their operations, what they got coming up, that kind of thing, because I don't focus on that. I can only focus on the numbers, and that's probably a hindrance sometimes, but it's also a really strong point to be from as well, because you don't get sort of tempted, or you don't have like skewed opinions. It's just like, once this improves, then I might consider it. But if it doesn't, I'm out, kind of thing. So, obviously, do what you like with this one. But I would personally be looking to, as soon as it gets to break even, I'd be jumping ship.
Well, today I would take break even. So I mean that you're certainly looking at it with positive eyes. So we'll see what happens with it. I will hold it
Yeah,
and see what happens. If it gets back to like $7 or $8, I may as well. I might just take it out at that stage, unless it was looking a lot more exciting. But if they keep getting sued for everything and doing recall of bikes and treadmills for everything that's ever gone wrong with equipment ever,
yeah,
then yeah, I might just have to bow out and take it as experience. Luckily, it's not even marginally close to what I put into the other stocks. So, but yeah, I don't want a loss on the spreadsheet, but it might need to be taken.
yeah.
So